with the situation going on in California, right, with fires burning and everything, some insurance companies did cancel people's policies, but we never really figured out or what would happen if insurance companies ran out of money to give back to people who were insured. So
I never thought
let's see.
that this fire burned down our house. I didn't even think it would. And especially all three, I was told that 56 out of 60 burned on our beach.
Wow.
I don't know how much burned in my own neighborhood, but I keep running into people from the neighborhood, and most people's houses are burned.
The first weeks of the new year were marred by destruction and devastation in Southern California as several fast-moving wildfires burned through 63 square miles of the Los Angeles area.
So, I've been told it's either a controlled fire that the fire department was doing, controlled fire, or it was someone lighting fireworks when they shouldn't have. I don't know what's true, but those are the two I know of.
Leaving more than 14,000 structures, including homes, businesses, and schools, decimated in their wake, and killing at least 27 people. Damage and economic losses from the disaster are estimated at $275 billion. Insurers in the state now face tens of billions of dollars in payouts.
It's going to be a massive number, and the full scope of the damage is still unclear, but preliminary loss estimates are running in the range of 30 to 50 billion dollars, and that will be the largest fire-related catastrophe globally in history.
Jesus.
Some people liken the insurance industry to the canary in the coal mine for the climate crisis. The canary is just about dead.
Adding to the chaos is a shifting and at times confusing California homeowners insurance market. Since 2022, 7 of the top 12 insurers in the state have stopped renewing and writing policies in high-risk zip codes. Other insurers have pulled out of the state entirely. And it's not just Californians who are facing severe climate risks. 44% of all U.S. homes are in areas that face at least one severe or extreme climate risk. That includes flooding.
They're making money off of us, the people, and they can't even insure us, and they're going, well, we gotta cut you. So how are they... Dude,
wildfires,
it's a messed up
heat,
thing.
Wind, and air quality risks. So that leads many to ask, do insurance companies have the reserves to cover this disaster, and what will be the cost for homeowners to insure properties
I think
in the
they're
future?
going broke.
This is going to take years to rebuild in this area. The cleanup is going to take months, but I'm also concerned once we rebuild, whether we will be able to find insurance. Those are some of the lingering questions that I wake up at 2:30 in the morning and think about.
You have to, right?
Joan Zoloth lives in the Rambla Vista section of Malibu. Her family owns 3 houses in the area. Zoloth's home, a beach house that belonged to her parents, and her son's home. All 3 burned to the ground in the recent fires.
And there's so much loss that it's devastating. I mean, my son is complete shock because he lost everything at his house.
Zoloth purchased her property last summer. At the time, she applied for homeowners insurance with USAA, a financial services company that provides insurance to members of the military and their families. The company rejected her application.
And when I said, look at our policies, look how long we've been USAA members, the person was incredibly dismissive.
Wow.
And said no, and not giving any reason, just said we're not going to give you a homeowner's policy there.
That's so
at that
messed
address.
up.
And I was really devastated because my parents had been policy holders since probably I was 6 years old.
California homeowners like Zoloth have faced a dwindling marketplace in recent years. The state's largest insurer, State Farm, announced in 2023 it would stop writing new property insurance policies in California, citing construction costs and increasing wildfire risks.
They're an insurance company for a reason.
9 months later, it discontinued coverage for 72,000 homes and apartments in the state, citing the company's financial health, inflation, regulations, and exposure to disasters. By 2023, State Farm's California surplus was down to $1.3 billion, compared to a $4 billion surplus in 2016. More than half of California's 39 million people are estimated to own their home.
The climate's getting worse, and we're having more extreme and severe weather-related events that are causing more damage, that are causing higher
climate
insurance
change
payouts.
doesn't
but
exist,
we're also
right?
shoving
It doesn't
more people and
exist.
businesses into harm's way.
Well, over the last decade,
That's what people keep saying.
for every dollar of
God,
premium, homeowners insurance premium that we have taken in as an industry, we've paid out $1.17 in claims. Now that's simply not sustainable. There is no endless pot of money that insurers have to be able to pay that kind of claim ratio.
And it's not just California homeowners facing hardship. Insurers have also been limiting underwriting in parts of Florida, Louisiana, and Texas as natural disasters grow in intensity and cost.
And as a result, we have these more extreme and severe wildfires, which become catastrophic and kill people and injure people and damage homes, and then also make it very challenging for insurance companies to keep writing insurance.
State Farm said in an email to CNBC that it is focused on meeting its customers' needs.
Yeah,
And
right.
that it is working closely with the state of California to create a sustainable insurance market. USAA did
You think
not
they're actually
respond to
doing that?
CNBC's request for comment.
I think
On top
they've
of the
realized their
severity of
mistake and they don't want
disasters,
to.
California's regulatory
with it.
environment adds another hurdle for insurers.
Part of the problem is there has been rate suppression in California due to Prop 103 regulatory framework. In other words, the rates that have been allowed for insurers are far below the actuarially indicated rate that's needed to cover the risk of loss.
Proposition 103 passed in 1988 and required the state's Department of Insurance to approve property insurance rates and ordered insurers to roll back rates by 20%.
Particularly in California, insurers really up until the last couple of months couldn't use risk modeling in California in their rate making. There was prohibition against it, and so they didn't have the benefit of having the latest data when it came to making decisions on their risk appetite.
And rising costs are another issue.
Yeah,
Over the
that
last
I
5
understand,
years,
but
construction services, that is the carpenters and the labor, that cost has increased by 35.1%. And the cost of construction goods, materials, has increased 37.3% over the last 5 years as well.
The loss of home insurers in the state has forced many homeowners into what is called the insurer of last resort, the FAIR Plan. The FAIR Plan is an insurance pool in which all licensed property insurers in the state must contribute to. It offers coverage to residents and businesses in vulnerable and wildfire-prone areas who can't obtain coverage from private insurers.
yeah, that kind of.
Between 2023
kinda
and
blew through that
2024,
right
the
now,
FAIR
didn't
Plan
they?
saw 40% year-over-year growth in policies statewide. In the Pacific Palisades, FAIR Plan policies grew 85% year-over-year.
We had to go with the FAIR Plan. This is incredibly shocking and devastating, and there's a lot of losses there. And I know that FAIR Plan must be incredibly overwhelmed
Yep.
with all these people calling and all these people needing help.
Now, the FAIR Plan could be on the hook for $8 billion
Jesus,
in losses
man.
from the fires. But as of January 10th, it only had $377 million to pay claims, as well as an additional $5.78 billion in reinsurance.
It's not enough.
Now, reinsurance is a big piece of how insurers cover large-scale disasters. Think of it as insurance for the insurance industry. But if the FAIR Plan can't cover the losses, those member insurers could have to contribute an additional $1 billion for
Jesus,
homes
man.
and commercial structures.
If the FAIR Plan runs out of money to pay these claims, and by all accounts, it probably will, every insurer that has operated in this state for the last 2 years will have to pay in proportion to its market share.
Good.
The plan also
should be.
caps
They
its
should be paying
residential
anyway.
payments to policyholders at $3 million, which means homeowners in high-income areas could find they're underinsured.
That's a problem we see after every major
It's a shame though. It
natural
sucks.
disaster is consistently people are underinsured.
There's so many people trying to access information because the scope of this disaster is huge, and there's so many people on FAIR Plan now.
Despite those challenges, experts say insurers should have the means to cover those claims.
The insurers have adequate reserves because they're required by regulation to have adequate reserves to cover these fires. This is what industry analysts call an earnings event, which means that it's going to impact their earnings. However, it's not a capital event. In other words, they've got reserves for exactly this purpose.
Again, the
But-
reinsurance market also plays a huge role in paying for these disasters.
There should be a but.
Reinsurance is a critical part of how we finance catastrophes, not just in the United States, all over the world. The benefit of reinsurance is that you have a global spread of risk, and so insurers have varying reinsurance contracts.
The problem for policyholders both in and outside of California is private insurers will likely be looking to shore up losses following the fires, meaning higher rates could be coming for all policyholders.
When you have a catastrophe of this magnitude, you're going to see insurance costs, not just in California, but all over the country, go higher.
It's not going to be a solvency problem for the industry, but it certainly is going to affect pricing going forward, and also perhaps availability in some cases, because insurers are going to have to make decisions about their risk appetite.
The last thing
I
we
still
want
blame
to do
insurance companies,
is to
though.
have to retrench
It's their
or
job
pull
to
out
protect
of
the
a
people,
marketplace.
or to ensure
But
them that if something does
it takes all
happen,
of us working
they are
together
there for them.
To create a healthy, functioning insurance
It doesn't matter what these
marketplace.
guys say.
So many
It's
people
all
have
in the
lost so
insurance
many
company.
memories, and the letter my dad wrote me.
The fact that we pay insurance for a car, for a house, right, for our life, and something happens, they're like, we can't cover that. Like, you get into a car accident, they're like, yeah, we can't do it. Sorry. Here's like $5. Just take that as is. Or like if you're like these guys, their house burned down. Like our hands are tied. We can't do much. Just it is what it is. But we appreciate you paying your premiums. Like, what kind of backwards country are we living in?
Telling me how much he loved me is gone. And it sounds crazy.
And I think I'm
but
just more upset with the
I was
insurance
thinking
company
about my
or
KitchenAid
companies.
mixer. You remember all the cookies you've made, all the homemade pies for Thanksgiving, and there's so much loss that it's devastating.
I'm just upset with the insurance companies, with what they've done to the people. They've screwed everyone over, and they know it, but they won't ever say it. They won't admit to it. Oh my god, dude. This is where it becomes political, and I hate talking about politics. This is one of the worst disasters California has ever had. One of, and insurance companies are being fraudulent, in my opinion. I could be wrong, but I do believe they are being fraudulent.